Good morning, everyone. This is the morning report. Let's jump right into things. Today is an FOMC day, and so that normally leads to dastardly trading in any event, but we've got a
It's 9
squeeze
hours.
on our moving average, and we are on the moving averages, and we are looking at the chart holding relative support. A couple of things pushing on the underside of this formation. We've got obviously buyers trying to stake a claim higher on the pullback. We have the prior day's low, the 50 simple moving average, or some line that it is being an imposter. I don't know what that number is today. Really, Thinkorswim seems to have it quite oddly. And so we have that, we have the Globex, and then we have a weekly pivot event below with some support. Technicals a bit flat, but with negative trending. So here's the thing. We've got a slope that's grinding to the north and flattening negative action sitting in the near term. So what do we have? A mess. Let's go to the 4-hour, see where we'll resolve. Early morning events tell us that our grind is still to the north, right? Still to the north. Though pulling back a little less, it's in a space that it's a lot less likely to roll if it can get back up into these levels up here and match the last piece. Remember, sideways action in a chart delivers quite a bit of information to us that we need to log in our mind about where the day is going. And for right now, we see the last 5 hours of relatively sideways action. Our fast MACD down to flat, our slow MACD up to flat, and our stochastic RSI and SMIs are sloping a little bit down, but still in trending territory. What does that tell us? Pullbacks into support. Likely, but just as likely to have buyers show up there. So what do we anticipate? Any pullbacks into, say, 2063 are likely to get bought. At the same time, because we have negative drift, it means that as we get up into the 2074 area, we're sure to see some sort of seller or sellers show up to quelch the move. And so what do we want to look for? You know, we want to look for the breach of this area, and because momentum is drafty, we have to wait for a retest for things to look very nice. Okay? One thing to remember, if you have slope that's up, particularly with the SMIs and the stochastic RSI, and you breach your moving averages, you will have drift to the upside. Take a look at the last time that happened. Here's the 10, here's the 20, here's the breach. Look at the slope. Up, up, inflecting. Tells us clearly we can go into the 50. What are we doing? Same kind of thing. Holding this region, but here's the rub. Where's the 50? 6 ticks above us. What's that tell you? Hold the phone. Just chill out. Not to fret about that at all. Just leave it as it is. Okay? And so what, well, that's not right at all, is it? And so all we're going to look for is the breach of congestion, the retest of that congestion, in order to tell us what's going on. We clearly have mixed momentum with drift that is likely to the upside. So just don't lose sight of that, right? Don't lose sight of that upside drift being a fairly solid likelihood in the mix. Let's take a look at the TF. And remember the formula with which we use to look at the charts. We consider price action and form. We consider technical indicators and follow through from that perspective. This trend line is holding that 4-hour slope fairly well. We need to pull it back just a hair. See if it can hold these a little bit more. We can see clearly we're at support, but caught between the moving averages. Where are we? Neutral zone. Negative slope in the short term, positive slope in the longer term. Fairly ugly. Okay? Fairly ugly. And so what does this tell us? We have drift that's likely, but our sideways action here, 1, 2, 3, 4, 5 4-hour candlesticks moving sideways. Look at the slope, right? Down to flat. And so there is a little bit of negative drift showing inside of this positive space. What does that mean? A break before a pop? Fairly likely for this chart, right? We've got upside drift on smaller time frames. We can see it. Relative upside, but flattening action and clear reversal. So it's leaving the midline. This is a mess. Okay? An absolute extraordinary mess. That's going to be tough to make money out of today until it breaks. And since today's an FOMC day, who knows if that's going to happen, when, whatever, right? Watch for the breach of the line. You know that if this line breaches, because we've got drift to the upside, this is the likely area we're going to. That's the daily pivot and the 50. 10, 11 ticks. If you're into it, have at it. The punch does appear to grind to the north, but that north is resistance. Let's take a look at oil. We understand front page today on the website. I decided I was going to put a link to a piece of geography. So for those of us that, I'm probably the only one left in the world that doesn't specifically understand where Yemen is, but no more, because I did all of that yesterday, trying to study a little bit about the backdrop of what's going on, because as you know, I do not believe this oil move to the upside is going to reward people over the long haul. I think this is a nice short-term move and taking advantage of it as such, but certainly did short at the 54 area yesterday, and this is coming into support right now as we speak. What are we looking at? Positive momentum, sloping down. Where are we going? Support. We're going to support. Nothing unusual about that. Where might that support action be? Yeah, right there at that 10, where it's sitting right now. The 10 on the 4-hour. Crud. Can I have an undo? Undo. Perfect. All right, so I'm going to take this trend line that we drew yesterday, that was the 10, and I'm going to shift it so it's got the slope, the relative slope, of the 10. We do seem to be holding it quite well. I have a lot of people argue that say that oil traders don't use moving averages. Somebody's using them. Because this is not magic right here. Not even. Okay, so let's take a look at momentum across the time frames that we test the 10. And so as we test the 10 here, we can see the momentum is sharply up. Very nice. As we test the 10 here, we can see the slow MACD is still up. Fast MACD is responding to this pullback event. And here we can see that the sloping action has dramatically shifted with the SMI and the stochastic RSI. What's that tell me? It's going to break this line. Now here's the thing. I'm in trending territory. So if it breaks the line, people who are whiz-bang smart about oil are going to say, oh yeah, you know what they're doing? They're just trying to shake out the weak hands. They're trying to shake out these weak hands so that the chart can move further to the north. So it's going to come back. People are going to buy it at that 52 level. It's going to bounce. And then at the bounce, we're going to have to look at this again. Because if in the bounce this continues lower, it means we're going to get a lower high and it's going to drop right back down into this channel. Notice, again, cleaning things up. We've got a channel here. It's a rising wedge. And so this is going to tell us what it is that our chart is going to do. Right? And this wedge usually has a drop-off part. We can draw a line in the center of this to tell us what's going on, but sometimes, you know, here nor there, doesn't show up. So we're just going to leave it as it is. Jump down into this region, realize what we've got. We see a squeeze. Beauty. We see a squeeze here. We've lost the squeeze. Now sitting underneath an upward sloping 50. Always hate that formation, as you know. But we're going to draw an intermediate trend line. Man, I love trading oil, even though it makes me crazy sometimes. Here's our intermediate trend line from above. Here's our trend line from below. All right, so what do we have? We've got the 10 floating here. That's why this is a different color. We're looking at this. What have we got? Negative drift, but the fast SMI slipping upward here into resistance. My guess is that it's tracking this event. It's rejecting that 35 level, negative 30 level, as it were, and trying to move downward into the space. What's the bottom line here? Today's the EIA report. This one is going to be messy. We're going to have another build, and we're probably going to pop again. We're not trading fundamentally, right? So if we just take a look at this, we realize that we've got upside momentum on bigger time frames, going to pull us back into support with these faster time frames and lower lines. And as soon as we start getting an inflection on these RSIs and the slow SMIs, we're going to be back in business. My thought is breach of 53.15 going to bring buyers that are ready to move up into new levels of resistance. If we break down 52.60, we should have some shorting action right there. You know, messy because things are flat and without slope. All right, taking a look at the NQs. Whoops. Yep, don't want AI. Yes, please do not tell me what to think. That's very bad. All right, let's go to the 4-hour here. Here is a falling wedge It's broken out of the level, 2 days, 3 days sitting at the 50. Let's take a look at what's happened to momentum over that time. We're holding relatively the same price level across 3 days. What do we see? Negative drift on the fast technicals, but positive drift on the slow. And so if we're looking at that, we're going to say, okay, if I can get above 43.48, I'm going to have myself a long. If I get below 43.25, I'm going to have a bit of a messy short, right? It's much better for it to break the level and retest the event. But if we determine that losing that level, 43.27, 43.20, yeah, we'll say 43.27. If we lose that level, what that'll do is give us downside action into this support, right? So slower time frames showing drift up, but in negative trending territory, slope, 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 right? Fast SMI has slope everywhere else, so we've got to punch up into resistance. We continue to hold higher lows. Listen to me. When a chart gets up over all of its moving averages and the momentum indicators have slope to the north, the chart will amplify its ability to move into the next line of resistance. That's all. That's not going to give us a big fat breakout. It's not going to do anything like that. It's taking us into the next region of resistance. Plan accordingly, right? Be wise about your setups from that perspective, and don't bring the swing mentality to the intraday game. Not a good one, right? You move quickly, you adapt quickly, and you get in and get out just as the charts tell you they're going to do, and nothing else. Okay? All right. Beauty. Gotta love it. You just gotta love it. Do not expect this chart to run down. I'm telling you. It's going to come in and it's going to bounce. So watch for it. And here are the breaches. We know these things are going into frontline resistance. That's the 50 for the TF. That's the prior day's high for the ES. Let's go to the others. Apple breaching the wedge. What did it do? Came right back to test the wedge. Ideal bounce zone here, folks. Sloping action on the longer time frame. Let's move it to a 30-minute. Coming up over the moving averages. Look at where we are. That is really negative. So here's what it's going to do. It's going to bounce all the way into here, 127 or so, and then it's going to retest and give you a higher low. Yeah. Why? Because that's what they do. When they change direction in this location, they retest the region. And so that's what you're looking for. Wouldn't be surprised if this one really gathers some traction today after the intermediate new higher low coming in. Netflix, listen, yesterday morning I said this. Watch the formation. It's at resistance. The chart feels like it's got one more punch to the upside. Be careful taking the trade out here. I've got 431 or 430 and some change as a breakout level. It's coming right into it, folks. There's technical divergence. Nice slope, but divergent action. And so you've got to watch this one carefully to begin to break down support. We can move that to a 15-minute chart. Very nice upside momentum. What's it going to do? You're going to anticipate that a pullback into the region is going to bring buyers. Those buyers are going to try and push it into a new high or a retest of the old high. If it comes into a lower high, you know it's in reversal. That's as easy as that one gets. Pull back into the 420 area, and so she goes. Tesla, another beautiful move. Popped up, came in. I said, hey, listen, it could come back into this initial breakout area. There's the 50 on the moving average. It held it all day. Remember, a chart delivers a tremendous amount of information when it moves sideways. We tend to ignore that, but here's what's happening. Slope, location, everything telling us that this chart was going to give us this new pop into the region. And here it's flattening out, right? Flattening out here, pop to the level. Listen, if you can get over 209.90 here, 210, that's a breakaway space. You've got momentum. It'll get back up into that 214, maybe 213 and a quarter. That's what you're looking for. Other than that, because I believe this is some kind of blow-off event, it should retrace one more time. If it comes in, gives us another higher low at about 204, we're off to the races to make some more cash with a long in Tesla. That's as simple as that goes. If you've got slope, particularly with this stochastic RSI coming up over the region, you better not be shorting it. You just need to go ahead and wait for it to come back in before you can go long, or wait for the breach over 210 and then take the runaway trade because you've got slope and location. On the 30-minute chart, you've got all you need. Let's take a look at Baidu, another pretty one. Talked about it yesterday. Slope, bounce zone. All day long. Look at this motion. Sideways to down. Look at the slope. Remember, slow SMI, stochastic RSI, this will give you the momentum that is pressing into the chart. These will give you the candlestick motions. That fast SMI, higher lows, you know you've got pretty upside. Look at this bounce here. Is this a rejection zone? Absolutely. What's the chart trying to do? Fill the gap. Fill the gap. And there it is. Right? So you want to watch this. Very, very steep. Very likely, because of where it's coming from, to come back. Watch for the higher low to give yourself another shot to the upside. That's going to be very, very pretty. SanDisk. SanDisk was at resistance yesterday, but it did a phenomenal job of holding the level and then continuing forward. It did come back into the region of support. Didn't come back all the way. Right? How do you know that a chart might not give you a big pullback? That would be slope of momentum. So if the slope of the momentum indicators, I'm above all my moving averages, what does that tell me? If I'm above all my moving averages, my momentum indicators are amplified in the direction of being above the moving averages. So if I have upward slope in my fast MACD, I have slope and location with my stochastic RSI and my slow SMI, and I have slope with my fast SMI, I know I'm going into the next line of resistance. Simple trade. Simple trade. If you've got high levels here and steep slope in the fast ones, you do not need to wait for some big rotation, though that obviously is going to come because of the nature of the game. You can take the breach. Look at the retest formation here. How does it work? We're above all of the moving averages. Here we are above a very linear 200. We test it, we reject it, we test it again, we hold it. There's the trade. Easy. Easy. So you hold it, you take the breach, takes you into the first line of resistance. That's what this mechanic tells you to do. When it starts lollygagging around here, don't hang out. Okay? You want to take your money and leave and get ready for the next setup. Guess where it is? It's here, above this area here, maybe 68.30. If it can hold that region, or if we're super lucky, we can take it right off of the recapture of the prior day's low. Why? I've got slope. I know I'm going into resistance. I have location. And this is so low, it is going to inflect. All it's telling me, though, is that I've got to move from 63.40 to 63.80. That's all it's telling me. Okay? All right. Let's take a look at Yahoo. Squeeze right here. Testing a trend line. Look at this. Low, lower, lower. Look at the momentum. I've got these split out, not looking at the MACD here. Look at the shift in the SMIs. Fast SMI, shifting up. Slow SMI, shifting up. Stochastic RSI, really punching into resistance. I've got to clear these moving averages, folks. I've got to. I have very negative slope. And if I take this punch to the upside, it will come back to retest these levels. This is not the nature of a chart that has momentum indicators that look like this does not punch to the upside. That does not happen. We have a punch up and then a return to downside momentum. That's just how that works. So that's what we're going to be looking for in Yahoo in order to tell us what's going on. Facebook, do or die space here for Facebook. We've got momentum indicators that are mixed. We've got moving averages that are sideways. But we've got negative drift on the slower formations and the slower momentum indicators. So my thought is this. If we breach 82.80, it's going to run into 83.20. Then it's going to do something else. You want to take it right out of the breach? That's a very legitimate trade. Right about here, you're going to have to start reestablishing what it is that's going on. If it loses this level, comes down here, pops up again, gives us a lower high, which would be so dandy, and these guys stay here, it's going to pull the fast SMI down, it's going to pull the fast MACD down, and it's probably going to pull the slow MACD down, which is sitting in negative trending territory. All right, but the breach out here going to bring the chart up. Listen, I moved the stop way in here in Facebook. I hope it's not for a bad reason. But my guess is we've collected a number of targets, and as it moves up into this noise, it's better to cut and run if we're seeing some kind of forward motion. All right, we're about to start the active charts in 50 seconds or so. That's the morning report.